All right, so we're going to go through a few data slides just to show people the macro trends and forecasts. And then, Kevin, we're going to get to your portfolio. We're going to show people the pie chart that is your allocation to equities. You'll talk about your allocation to fixed income, what you're doing in crypto, and alternatives. So let me just take us through a few slides here. If our producer could first show us this here. This is just a forecast for bonds. Everyone's heard that yields are going up, and you actually see that yields bottomed basically 12 months ago or so, popped up to now 180 roughly on the 10-year. And there's the most notable thing on this chart is the wide range of forecasts. Those three different dotted lines, they all come from Bloomberg data. They all come from people that spend their lives trying to forecast yields. And what this kind of indicates is all the experts essentially disagree with each other. There's a very wide range of forecasts, the midpoint of that range being at about 229 by the end of this year, which number you see at the top of the page. Skip ahead to the next, you're just going to see volatility here, and you see these spikes, and they kind of coincide with elections. And so the next election's coming up, and maybe we'll see another volatility spike as we get there. Quick plug for lower volatility strategies, maybe OUSA for large cap, OUSM for small cap would be a place to be through volatility. Next thing, inflation. Again, the experts somewhat disagreeing, but all of them really agreeing that inflation is going to come off its current peaks, whether it goes a tiny bit higher first or just keeps going down from current levels, dropping by the end of 2022. Midpoint of that range is about 3%. And in the Fed we trust. I think the Fed is going to bring out the inflation battle artillery relatively soon. You'll see the short end of the curve move up. Maybe the long end of the curve has done a lot of its move already. News on today, of course, we've got yields easing, and China cut its yields, the two primary benchmarks, only slightly, but really showing the world that China is actually going to try and stimulate their economy by reducing interest rates, and that's just encouraging for what's called growth stocks that have been under a bit of pressure, headwind with yields having moved up. That's obviously had an impact on tech stocks, growth stocks, etc. And maybe that pressure is easing when it comes to the long end of the curve.